G'day, Money Miners. Welcome back to another week, boys. You got a big bloody humdinger of a segment deal in the big cap space to go through here.
We do. It extrapolated massively from the initial kind of story, but we're talking mineral sands.
Most of and small caps.
Yeah, most of the mineral sands players in that kind of niche part of the mining world, and yeah, M&A has its big place in this story as well, and a bit of history as well that you love, Matty.
I love it. Oh, speaking of history, on the back of some visible gold intersections today, I'm going through visible gold history / visible gold porn, really. We've got a lot of bloody few pictures, and there's one picture I cannot get a hold of, but I'll keep it for the money miners.
I think I know the one you're talking about. This was a photo from underground. Yes. Yeah, did the rounds maybe like 5 years ago?
Was it? Maybe 90, it was in the 90s. So,
okay, that's a bit more than 5 years
ago. Elusive from the photo. Anyway, I'm a bit slow today, boys. I just had a gutful of Italian down at 6011. Cheers, Sal. I'm a bit bloody parched. Actually, hold on. I've just got to get a water. Hey, Gerard James, can you get us some water, mate? WA Water Boys, they can get you bloody drink of water if you want, direct to your hand. That's the relationship we have with them. Mate, great to have him back in the team. Finding water for the WA mining industry. Mate, he can find water and get rid of the water if they want.
When the mines are parched, he gets them water.
Mate, he's ending around Mount Franklin's like they're going out of fashion up at site. So, mate, you want anything water bore drilling related, Gerard James at the team at WA Water Bores.
He'll go anywhere as well.
I don't know anywhere. He will go anywhere.
I know for a fact he'll go anywhere.
He'll do anything for you. Right. Lads, take it away. What's going on? Rio, Tinto, Kenmare and Oryx Global.
Yeah, exactly. And we've been taught, Matty, that it's Kenmare apparently. So
right.
I know how grating it can be listening to a podcast and somebody sort of pronounces things, and I'm sure we do this.
Kenmare?
Kenmare. Which is exactly how I pronounced it to start with. But we've been taught it's a
Kenmare. Yeah, that's obvious now.
It's a company from Dublin. They're based in Ireland and listed on the LSE. So there was an eye-catching takeover attempt on Friday that came out, Matty. Oryx Global, this new sort of PE shop, which we'll give a bit of a 101 on in a moment, teamed up with Michael Carville, who's the former managing director of Kenmare Resources. He'd only left in September of last year. Now, they came in to try and take over his old business, bidding at a 92% premium the last close. So
is that cash?
All cash. So there's a fair bit to this one.
All right, mate. So who are the parties involved?
So we've got Kenmare, like I said, LSE listed, Dublin based. They've been around quite a while. They were a oil and gas shell back in the day, 70s and 80s, and then Michael came along in 86, 87 and sort of took the company to what it is today. He's run the company for about 4 decades. So the company itself operates the Moma titanium mine in Mozambique. This one came into production in 2007, 4th largest producer in the world of titanium feedstocks. So we're talking ilmenite, rutile, zircon, all these kind of products. And that makes up a bit under 10% of global supply. One of these mega long-lived assets, sort of 100 years, they say, at current rate
mine
rates.
life.
Crazy. So
I assume there's probably more beyond that too. If you got 100 years, there's probably some other shit you can take too.
There's no point counting beyond that. Kind of irrelevant at that point. The company, after the share price bump, is capped at £360 million, and it's also in a bit of an investment phase right now. So they've guided to $150 million to be spent this year alone. That project that they're kind of in the midst of comes in at a total of $340 million. It's already kind of exceeded initial plans, which has agitated a few shareholders out there. So in the context of all of this, you've got a mineral sands market, which has been fairly weak since really the back end of 2022, which was a volatile time for the market. More company specific, you've got political upheaval that we touched on late last year following an election in Mozambique. We saw miners like Syra as well as South 32 were both impacted by this and their operations in country there. And added again to be a bit more specific on Kenmare is a few question marks around royalty agreements and these sorts of things, but we won't dive too much into that side note at the moment.
How about Michael Carville?
Yeah, so obviously knows the company inside and out, ran it for the best part of 4 decades. And it wasn't that long ago that he kind of stepped down and became a consultant to the business. He's in his mid-60s now, but clearly is a big believer in the business, has always been a big believer. He was resistant to takeover attempts throughout the 2010s. But yeah, he's come back for another bite of the cherry. And you've got Oryx Global Partners, the group that he's teamed up with. They're a relatively new private equity group. Some people might recall just last week, Elizabeth Gaines, obviously the former boss at Fortescue Metals, and Laura Tyler, who people might know from her time at BHP as well as more recently at Adriatic. They joined the team in varying kind of capacities just last week. So the group itself is Abu Dhabi based, very limited info on them. Don't really know how much capital they've got to deploy, whether that cash is kind of in the accounts yet or what kind of stage they're at. There's no other sort of big deals that they've got their name tied to as far as I could kind of tell. And their mandate is pretty broad. So they talk about looking at opportunities through the entire minerals value chain. That can be from mining itself to mining tech related to services, power generation, a whole suite of things. So there's, a bit more questions than answers on the front of Oryx Global, but I'm sure in due course we'll find out a bit more about them.
So a bit at £5.30 cash, but the market didn't go anywhere near that share price. So.
No, really interesting, right? So like you said there, Trev, £5.30, all cash. Kenmare came out and rejected it when they told the market about this. They said they'd given the consortium access to limited due diligence info, which is kind of funny because I don't think there would be anyone in the world that knows more about the business than Michael, given his sort of tenure there. But that'll perhaps help them a little bit. There's, of course, these UK and, well, more specifically Irish takeover rules in this case. Those two are kind of similar in the fact that you guys will remember when we spoke about Anglo and BHP, you've got these kind of put up or shut up rules, they call them, within a sort of month or so. I think April 17th is the date where they have to announce a firm intention to make another bid or walk away. But like you say, Trav, 93% premium, but the stock only closed up 40%. So that tells you a fair bit about the market's belief on the bid itself, on the sort of solidness of the bid, you might say, on whether they might come back, what the kind of actual intentions are. It's it's an interesting one, right? Totally.
It tells you that the bid might have some uncertainty about it in the market. Absolutely. I mean, Oryx, like you said, do we know how much money they really have? Like, there might be uncertainty about that. The wording of the announcement itself was kind of interesting. It said the most recent proposal received was at a price of £5.30. So there'd been previous proposals in place, but they've chosen kind of now to disclose to the market that they've rejected a proposal. So what's the rationale for that? Is this like an attempt to try and kind of elicit a competitive outcome with other parties? Like, what's the motives? Regardless of what that is, what the share price is telling you is that there's some doubt about the realness that this will convert into a real offer. Yeah, it's super juicy. The wording again leaves a few more questions than answers, but we're getting closer to what's going on. And I think we should fill the money miners in on a bit of history we found out not that long ago. We're talking about 2024 here. You got Rio Tinto as well as the UAE's International Resources Holding. Both of those parties ran the numbers on Kenmare. It's sort of been reported. So money miners might remember IRH, that group, that really generically named group. They came in with a last-minute bid to buy 51% stake in Zambia's Mopani copper mines, so some famous assets. And they got very close to actually picking up Konkola, also in Zambia, off Vedanta, some pretty well-known copper operations. That one didn't pan out, and we'll talk a bit more to the Rio Tinto angle in a moment. But this all came from an activist investor, the big London-based investor, J.O. Hambro. They ran a bit of an activist campaign early last year. They got in touch with the company. They put forward, obviously, a few suggestions, one of them kind of being that perhaps more value would be realised if this were to be merged into a bigger group and didn't have that solo asset, single, African jurisdiction kind of risk associated to it. And, I think at the end of the day, they were a bit frustrated having seen their shareholding go up through 21, 22, and then ride it back down. They wanted to see a bit more action on that price front.
Is J.O. related to Evie Hambro?
Yes.
Like what, brothers or something? Or?
I think the firm goes back longer, and my understanding is Evie is one of the children.
Yeah, right.
Yeah.
Go, Evie.
Yeah, it's a kind of important money manager and family in London there.
Yeah, right. Come on the show whenever you want, ham bros.
get back in touch. So there was a bit more history, Matty. This is what I was referring to earlier that I wanted to dig into, and this is the 2010s, and I've just found it super fascinating. And I think it gives more context to the story that we're talking about here. So the early 2010s, Kenmare is just flying. This is on the back of the China boom. Everyone wants these titanium feedstocks. Global GDP is moving upwards, specifically driven by that China boom. Dow Chemical were apparently circling the company, as were Rio Tinto back then, and they reportedly considered a £2.4 billion bid, which is just be enormous, but that didn't actually eventuate. It's got to be said that Kenmare's max valuation only peaked at £1.2 billion, but that's still pretty lofty. And then unfortunately, as China kind of cooled, you get to the point in 2014 where the stingers really come out the stock. They've taken up a massive CapEx program to expand production. They've debt funded that, which has put them in a world of pain. Aluka comes in and bids 500 million euros for the stock. But over the next 18 months, they continue to revise that down as conditions continue to fall and the ability for the company to service its debt looks more and more precarious. So at the end of the day, in about December 2015, about when commodity markets are reaching an absolute low, Aluka just walks away and they kind of call it. And Kenmare opts with the route of a capital raise. And this capital raise is done at a hugely dilutive price. There's 90% dilution on all the previous shareholders. So complete rapid recapitalization of the business. The previous equity investors get wiped out. The Omani monarchy, the Sultanate of Oman, comes in and takes a 30% stake in the business. And they, over the last 10 years, have bit by bit, it took them a while, but they've been selling into buybacks and other capital returns programs from the company. And the final little twist here that I think is particularly relevant to the takeover is that Kenmare signed up Rothschilds to be on defence for them. And subsequent to that, about 4 years ago now, you've got the lead banker who ran defence for them join Kenmare as the chairman. Then you've got the long-time managing director step back from the company, and he's the one who's now come and tried to buy it. So there's been a bit of role reversal between the two guys who were formerly on the same side, and now one's playing off against the other, trying to extract a bit more value.
Yeah, right. Every time you bloody, oh, here's another twist for you. When you mention Rothschilds, it just gets me, I'll just think of Sean Russo because that's his old employer. You think of hedging, you think of hedging risk, you think of CRE insurance. You've sent me down another 7 degrees of separation, JD.
It's the logical connection.
Didn't you think of that? Didn't you? Didn't CRE insurance just pop into your head then?
I couldn't get CRE out of my head the whole time.
Mate, I can imagine anyone listening in Orange right now be already thinking of them because they would have probably had a coffee next door to them at their Orange office.
You could say the same about Perth, Brisbane and Sydney as well, mate.
Oh, no. And where's next?
Mining in Mozambique, they are phenomenal at operating in jurisdictions like that, Matty.
Mate, if you've got any spare office space in Mozambique, I reckon we've got a tenant. CRE Insurance, ready to tackle Mozambique, I think. That'd be perfect over there.
In the meantime, they'll do it from Perth.
They will. They'll go over there if you need them to.
There's a fair bit of business interruption that can sometimes happen from time to time, including in the story I'm about to tell, and CRE Insurance can help in those situations with the insurance required.
Yep, but just give them a call regarding what Trav is about to tell you. Right, take it away. What is just take it away.
One of the questions we're trying to answer in going into this story is maybe the revelation of this bid from Morix or whatever is there a bit of an attempt to try and get Rio to come to the party and pay up for Kenmare at a pretty elevated price.
Bit of gamesmanship.
Chunky premium, yada, yada, yada. They've had, interest dating all the way back. And so I got down a bit of a rabbit hole to really look at Rio Tinto's like history in mineral sands in this part of, in Africa specifically. And I came away with some big kind of takeaways as they relate to where they're at right now with their infrastructure and their operations in South Africa. Their mineral sands history in the African continent is so interesting. If we take a good look, we can try to have a guesstimate about whether they're going to pop up and bid for Kenmare, but also, like, are they going to bid for ASX listed sovereign metals, for example? And I'll get to that. So Rio Tinto's major mineral sands operations are in South Africa. This is the Richards Bay mineral sands operations, but they also have operations in Madagascar near Fort Dauphin. They've got a growth project in Mozambique themselves, but that's got complications I'll talk about soon. Plus, they own 19.9% stake in sovereign metals in Malawi, which I'll get to. Richards Bay Minerals, it's a complicated asset for Rio. They basically have sold, like Rio's sold, I think, all of their other assets out of Rio Tinto except for Richards Bay Minerals, but they've kept this, and that's as South Africa has become an increasingly challenging jurisdiction to invest in, but they've kept Richards Bay Minerals, and that's because it's a strategic asset for them. It's one of the largest sources of titanium feedstock and zircon kind of globally, and Rio, they've got vertical integration in this market. They've got they've got a smelter at Richards Bay as well, which helps them produce an ilmenite slag, and they've also got some downstream stuff going on in Quebec. And collectively, all of these sort of assets position Rio with like a 14% market share in that titanium feedstocks kind of market, which is an important market share in an industry where you kind of want to have some volume and pricing power, because prices are oftentimes contract based and opaque.
So when JD, when you said Kenmare was the fourth biggest producer in the world, is Rio Sovereign in the top three? I assume
Sovereign's not a
Sovereign's
producer
not
yet.
there yet. You've got Iluka, you've got Tronox as well. Rio being the biggest.
Yep.
These guys at fourth. I want to say Aramet do a bit as well.
And Sierra Rutile.
Leon Oil.
Go Sierra Rutile. I haven't forgotten about yous.
And then you've got about 35% of the market coming out of China.
Yeah.
And a lot of that is a byproduct from iron ore mining.
Where's Sovereign going to sit once they once they hit nameplate?
Don't quote me on that. Yeah.
Yeah, it's a very big asset, but
There's a bit of framing on what size it comes out at and how we kind of go. I think we should put in perspective the size of this kind of market and think about what these earnings kind of mean for Rio.
Mate, Rio's like a funny company, right? They've got like exposure to so many different commodities, but like really when you look at their earnings and what actually moves the dial, it's like Pilbara iron ore and that's it. And I say that kind of like tongue in cheek, but if you just like compare the EBITDA from their entire, what they call this this kind of business line, they call it titanium and iron, and that is in 2024 a mere $609 million in EBITDA. Compare that to Pilbara iron ore, $16.5 billion. So I mean, we're just like in a whole other ballpark. But
and then you got the North Canadian iron ore as well.
But even that's tiny in here. Like that's only 700 million.
Oh, but just
EBITDA.
iron ore for them. Like, well, you think Rio's a smaller company than BHP, but they produce more iron ore, so it shows how leveraged they are to iron ore.
Yeah, absolutely. On the Richards Bay front, you gave a bit of colour on them. There was a pretty important part of the history, sort of in 2021, there was a pretty sort of violent event that happened. This was kind of following after Rio Tinto had already tried to make a partial kind of exit from South Africa. They were holding on to Richards Bay, but this would have done a bit to their thinking. Hey,
mate, it's horrible, this part of history. Like an executive was murdered.
Jesus.
For context, Richards Bay Minerals operates in an area of South Africa historically occupied by like Zulu-speaking communities. There's several different clans with influence over the area, and they've got kind of contested claims themselves. In 2018 to 2019, there were violent protests at Richards Bay Minerals. Basically, demonstrators were blocking roads, setting vehicles on fire, damaging property. This set of protests led to a temporary mine shutdown mid-2018. The cause was put down to local communities demanding more and preferential jobs, and also just rival clans fought over contracts for transport security supply services. When RBM resumed operations after some government intervention, like in due course, but then that unrest did set the stage for future disruptions. In 2021, more protests, so arson attacks and disputes over jobs. Nico Swart was the general manager of Richards Bay Minerals, responsible for security operations, and he'd been involved in managing tensions with some local communities. On the 24th of May that year, he was on his way to work when his car was ambushed by gunmen. He was shot at least 27 times in just an utterly horrible event in the history of RBM and Rio Tinto.
So what kind of happens subsequent to that awful murder?
So Rio, they suspend the operations. They also put the development of Zulti South on ice, where it still remains on ice today. And Zulti South is an incredibly important part for Richards Bay Minerals, because when this development was approved in 2019, there was nearly $500 million that was agreed to be invested, which would effectively sustain RBM's current capacity at that point in time and extend its mine life. So as RBM sort of sits today, they are producing out of 4 mines in the Zulti North lease area only, and plus there's a giant kind of mineral separation plant and a smelting facility as well that constitutes the infrastructure. So Zulti South underpins Rio's substantial kind of infrastructure already to keep things like at full capacity or whatnot, but it's been on ice for 4 years, and that sets the scene for Rio's potential M&A appetite today, I think, because they have the infrastructure which requires kind of concentrate in order to be fully utilised. So if you think of their mineral separation plant that they've got, that's being fed from these 4 mines, and each of those mines has its own kind of concentrate plant. So there's 35 million tonnes of ore from those mines, generates 1.2 million tonnes of heavy minerals concentrate, and that feeds the mineral separation plant. That mineral separation plant, separates into ilmenite, zircon, and rutile, and the ilmenite, which is rich in titanium, is sent to the smelter there for further processing into a titanium slag and also pig iron. Our word on the decline is that Richards Bay's infrastructure is being constrained by its inputs.
All right, let's kind of run through those inputs. There's a couple big ones that come to mind, right?
It's twofold. First is concentrate supply. So they can't get enough concentrate at the moment to keep the minerals, the MSP and smelter fully utilised. And the second one is power issues. Like Richards Bay Minerals, they face frequent kind of load shedding issues. It's connected to the state-owned power utility, Eskom, which has had a litany of issues over recent history. And the smelting phase here is really energy intensive. These are electric arc furnaces, which require stable and a really high amount of power. So you can imagine the power side of things has undermined, the competitive positioning of the production you're actually making, and Rio Tinto is pretty concerned about that. So their current predicament, they're keen to get more concentrate, and frankly, they've got limited options here as well.
Yeah, it's really interesting. It looked like South Africa last year was kind of turning a bit of a corner on the power front. Eskom has troubled a lot of downstream production in country for years and years and years and years, far too long, and it looked like they were kind of turning a corner. Actually, up until this year when we were there, and then they had these power outages again, which is a bit sort of disappointing to see. But that's going to kind of run its course, and hopefully it turns to the positive. Let's focus
Rio
on
signed a few PPAs as well, or power purchase agreements with separate independent vendors.
Yeah, so they don't have to rely on Eskom.
Yeah.
Let's focus on the concentrate side of things, because there are a few options on the table, and in time we'll kind of circle back to Kenmare, but they can look at a few different projects around the world as well as what they've got in their own growth projects.
I think their first choice would be develop Zulti South. This is complicated given the historical tensions and violence, but it appears Rio is gearing up to pull the trigger on this development, absent kind of any more tensions or escalations or violence or property damage, etc. We think that they have signalled a decision around mid-year this year to develop Zulti South. Second choice, or potential choice, is Mozambique, and not Kenmare like you talked about, but remember I said Rio Tinto had a growth project of their own in Mozambique. It's called Matumba, and a pilot plant was even built there in 2020. I don't get a good feeling about its prospects to fit in the mix here, because there isn't much information since, and the JV partner Savannah, they pulled out of the JV in 2021, which let Rio take the lot for a pretty small sum of money. What we hear is this project, Matumba, is kind of compromised by the very large community displacement that would be required to mine there. So yeah, put a question mark / line through that one.
And then we go to Madagascar, don't we?
Not the movie.
Third choice. So Rio actually has a mineral sands operation in Madagascar already, and best I can tell, operations late life, grades are declining. Mine life will extend, but it's sort of 5 to 10 years mine life remaining at the moment. There's already an MSP at that operation, and best I can tell, some of the ilmenite that comes from the MSP does in fact get shipped to this Rio's smelter in South Africa already to produce the titanium slag. But also in Madagascar is a substantial mineral sands development project, which used to be owned by Base Resources, now Energy Fuels. I think they call it the Toliara project.
Toliara, yeah.
And that sounds all systems go. So in the next few years, that'll hopefully be a fully operating mine. But the fact Energy Fuels acquired Base Resources and not Rio Tinto acquiring Base Resources sort of begs the question about Rio's long-term view of remaining operating in that country, in that industry itself, I think. And
then sovereign metals kind of is worth raising in this discussion. You got Kasia.
Absolutely, mate. I think I pronounce it Kasia, but I could be saying that wrong. But yeah, this one will pique the interest of the ASX punters. Kasia it's one of those exciting rutile development projects. It's in Malawi. It's owned by ASX listed Sovereign Metals. Rio Tinto actually owns a 19.9% interest in Sovereign Metals already from a strategic agreement struck between the two companies in 2023. Part of that agreement, Rio has the exclusive right to take operatorship, and if they do that, then they maintain 40% rights to the product that comes out of Kasia. But there's a few parts to Kasia itself. It's enormous. It's the largest natural rutile project globally. The PFS says it will produce two products, one natural rutile and the other one is a graphite product. And whenever we think graphite, I always just get a sick feeling in my stomach. But that's just because of the historic stuff around graphite.
Yeah, it's been a tough road for some Aussie listed graphite producers in that sort of part of the world, hasn't it?
Has anyone done graphite good or been successful at it?
China.
Natural graphite?
No, not yet.
Tough market.
We're one day closer.
One day closer. Yeah, one day closer. If you look at the PFS, so that it's in Malawi, right, and that's landlocked. So to get the product to one of the ports, you're paying substantial kind of logistics costs here. About $100 per ton is required to get it to a port, but that's okay because the two products they want to sell for a fair bit more than that. But you've got a really long mine life because it's a big resource. The PFS has an initial mine life of 25 years and an IRR of 27%. So that's certainly in the ballpark of an asset that is fit for a major like Rio Tinto when you've got healthy IRR, long mine life, and in rutile, which they care about. While graphite has been a disaster for everyone that has kind of tried to make it work in the West, hopefully the project could buck that trend. Both rutile and graphite make up roughly half of the revenue each in the optimized PFS economics. I think the Kasia is interesting, but it isn't cheap. There's a $560 million market cap, and the stock's near all-time highs. But they're going to have to kick a few goals on that graphite product de-risking too. They've been putting out more and more information as it relates to this. And I've listened to Jakob Starsum at Rio Tinto talk about the potential of entering the graphite market, and he said words to the effect of we're already in 13 commodities, like it doesn't bother us if we get into one or two more. So they're open-minded about that, referencing graphite specifically. And I think just given the complexities of the market, it's worth a bit more scrutiny as well when we just look at the study numbers of Kasia, because Sovereign's PFS, they use a graphite price of roughly US $1,300 per ton, and they defend that as conservative versus Fast Market's long-term forecast of US $1,846 per ton. But just look at the recent prices, you can see the price of flake graphite fines kind of nosedives below $400 per ton. And it's the fines which is actually the big part of the market. The coarse flake is a much smaller part of the market, even though you get a higher price for it. It's the fines that is used in battery anodes.
Yeah, it's a super interesting market, and also it stands out that they don't really push the ex China, like that's the big Syra route that they've gone down. Got that DOD funding package, sending stuff to America. They're pointing to that being the only way that they can survive in this market, and that they're going to get a differentiated price due to the manipulation that China has done. So it's a strategy that stands out in its approach in my eyes.
Well, you might get 19.9% more now, less than the 20% China tariff.
Yeah, and
maybe. And
now Rio's like gobbled up Arcadium. There's probably going to be internally more efforts on the fully integrated and downstream kind of battery stuff, and this can kind of potentially feed it. But yeah, on my scan, you're looking at roughly 40% of Cage's product sort of meets the fines micron cutoff or there or thereabouts, which has me just wondering if their assumption on price is reasonable, and it's a pretty meaningful part of the revenue, right? So when you're talking about the 50% of revenue versus the rutile itself. All that to say, if Rio can get comfortable on the graphite part, which is where the majority of the question marks are going to be, then Sovereign looks attractive.
Absolutely. And it's hard to distinguish with the share price rise. How much is that like other investors getting comfortable with the fact that Rio Tinto is now there, or rewarding the company as they kind of get closer to making a call? But at this point in time, it's been a really good last year or 18 months for the company on that front, as they continue to release all that network that you kind of speak to there, right?
Yeah. So it is interesting. Like, I think after doing all that deep dive on Rio Tinto and their history in mineral sands, like they've got deal appetite. They're interested in third party sources of concentrate. I mean, there are going to be logistics challenges to actually get a concentrate, but maybe you can get at least the ilmenite to help feed the smelter from somewhere else. And yeah, so there's a bunch of potential things on the line there. The one thing to just watch is around mid this year, if they pull the trigger on Zulti South or not.
Yeah, right.
It'd
What
be
do you
very,
think?
very
Speaking of
interesting.
Aussie-based mineral sands, Petrotherm, that's getting talked about. That's actually a rutile in South Australia. What's the goss on that?
It's been very volatile, hasn't it?
It came off a lot since it's
Ray just did a raise, I think.
Yeah.
So I come off a bit there, but that's like Aussie based. Seems to be the one behind Sovereign on the listed ones in Australia.
I mean, you look at Iluka and their working capital build, or their inventories, whatever way you want to slice and dice it, but they call it $1 billion that they've now got
in inventory.
In inventory.
Wow.
They're capped at less than $2 billion. So inventory has swelled massively since 2022. It's a super interesting, somewhat opaque market. And to round it back to Kenmare, you've got a pretty limited number of potential buyers. So obviously we went into detail on Rio Tinto's interest and capacity to have a look and take them out.
I don't think they will, is my gut feel, by the way.
And then you've got Tronox, who admittedly we went far less deep on, but our gut read was that this wouldn't be the right opportunity for them. So there's not an awful lot of buyers for Kenmare if they're thinking someone's going to come in over the top. But
Lucas not going back to Africa.
Yep, they've had a go at that in the past, and I think they'll stay on Aussie shores for now.
So it's like the whole, with this increased activity on the back of the Sierra rutile battle, mind you, but even like take away, like considering the inventory you said that Iluka's got, is like the rutile, like the global titanium market, is it peak? Is there a structural supply deficit coming up? Like, what's the market feel? What's the vibe of it? Is there differing views of it, or?
Every market's got a structural supply deficit coming, Matty.
Yeah, they've got one of those charts where supply goes down like that and demand goes up.
Well,
I think of the market as kind of roughly following global GDP, but you've got those opaque factors, you've got those byproduct elements that play a role in it. A lot of it for a while was sort of tied in with this Chinese property boom. Obviously, that's cooled down, and this all happened at a time that a lot of the producers were expanding supply, so that all culminated in a number of additional supply and decrease in demand factors hitting at the same time, which was not good for the market outlook. So it has come off pretty substantially since 2022. The conflict in Ukraine and Russia impacted markets as well, but it's kind of cagey right now, and I think that's a bit reflective of kind of how we think of like iron ore and these sorts of things as well. Maybe not so much on the supply side, but just like the world's growth is looking a bit more shaky at the moment. So that's kind of one lens to think of it as.
Yeah, what's the most leverage to titanium? Like, what's the biggest factor in increasing demand for titanium globally?
Increasing demand, increasing the standard of living across the world.
Paint.
Yeah.
Paint.
How many coats of Dulux do you want on your?
Yeah.
And how rapidly do you repaint your stuff?
10% of the market of the titanium goes to titanium metal, which is used in aerospace, so both defense and plane parts. Yeah. So again, that sort of has a part military application as well as just overall people flying in more planes. So yeah, they put a chart of GDP going up one way on their map, and titanium demand kind of following that ilmenite.
And
Interesting.
The thing JD mentioned too is like the tendency of producers in this industry to build massive stockpiles when they can't get the price that is appropriate really limits the upside in this market. You don't get big flex ups in sort of price because the producers build inventory and then they release that inventory when prices are appropriate, but that keeps you don't get really volatile upswings like you would in other commodities as a result of that.
Yeah, look at 2022 and look at Iluka's inventory. It falls. Or 21 as well it started, but 22 it drops. 23 it starts picking up massively again.
And so new supply is really, really responsive to better pricing environments too. There's if you think of the types of operations these are, you can somewhat easily just start mining and processing a bit more. There's oftentimes spare capacity. Think of Iluka having their synthetic kiln 1, kiln 2. There's swing capacity that can kind of come online as the market requires a bit more capacity, and then it pretty quickly gets supplied when the demand's there, and all of a sudden prices don't stay elevated for long.
Very interesting. I know more about titanium as of 10 minutes ago. Thank you very much, gentlemen.
I know far more than I did as of this morning. It's an interesting one.
Good stuff. Right, a bit of bloody visible gold porn we're going through. Have a look at this for you. Oh, this is New Murchison Gold. Hit the bloody a good chunk of flake here. On
ding,
up
ding,
and down.
ding.
Oh, yeah, ding, ding. Ali GC's dinging the crap out of the joint today. Buddy, I looked at this cord. I'm thinking, holy snap and duck shit. I've not, in terms of when you see visible gold, I'll bring up some historical ones, but it's usually a speck or something. There's not many that actually look like this, which really sparked my attention. So doing a bit of extensional drilling outside the resource in the pit. They've obviously, as we've mentioned, got the Westgold have got their foot on them pretty much for mining 1 million tonne out of that open pit. So this is beyond that for the future. So I thought, why not, looking at that core, look at some visible gold from history and just see. There's one I haven't been able to get a hold of yet, but I'll get it in due time. Going to go through. Type visible gold into ChatGPT was the first starting point.
Walk us through history, mate.
There was actually one in February this year, Advance Metals. They're down in the Victorian goldfields. So you can see, as I said, there's what's me going on? I'm actually on mobile view too, and it's bloody shitting. Victorian
goldfields have been good for the visible gold, haven't they?
Yeah, I think one I've probably missed was Southern Cross. I think they hit some as well. So you see this one, there's your visible gold, which is for the money miners that don't know, when like to have visible gold is not as common. Like most gold you cannot see. Like 99% of drill intersections is gold you cannot see. That's why it's when it says 10 grams per tonne, which is pretty good grade, that's 10 parts per million. So hence it's gold that is that small, you just cannot see it. And these are the cases where you can see it, which sometimes, not all the time, is an indication of higher grade because it might be just very isolated.
Yeah, I think it's important to remember it isn't always. So it can be a bit deceiving, and you can mentally throw you off when you see a big chunk of yellow stuff, but the grade doesn't come out quite as good as you think it might.
Yeah, and you got to also think of how they extrapolate it over like if it gets smeared across a resource, how if they put top, and we'll show here where they put top cuts on assays where they say, right, we're not reporting anything above 50 grams because they don't want to blow out the area of influence of this one bit of visible gold, and then you end up mining next to it and there's fucking no gold. So that's a small little speck there in the Victorian goldfields. Next one we'll bring up on Matty's visible gold. I'll stop saying porn. Ballymore Resources. This one's a bit of a fine spec as well. I think that was the picture I was bloody talking about there. What that come back at 0.4 of a metre at 54 grams per tonne. So even visible gold was still 54. So it's not like knockout. Next one, Odyssey Gold. These guys fly under the radar a bit around.
I remember this one.
Yeah.
2021. And it's like, it obviously looks so, gold-like, but I remember it come out, a subsequent announcement said that it broke the upper bound of the machine.
I've actually got that.
I hate it when that happens.
That one here. The central sub-sample has exceeded the laboratory upper detection limit of 12,000 grams per tonne. So it's just pretty much gold in that section.
Yeah.
That's West Perth Hall of Fame sort of stuff.
I love it. So they're actually in the... Got it. They're right in the Murchison bloody thing, but just north, in between Meeker and Kew. So, which is actually pretty close to where New Murchison have hit theirs. So that's not a bad look. That's a pretty good looking one, the Odyssey one. Great Boulder. This was the one where they went into trading halt straight away because visible gold was coming out of the RC chips, and Pato actually put in the announcement, we had to go into the trading halt before the drillers got to the pub. So this one actually come back at 1 metre at 3,451 grams per tonne. So that was a bit of a humdinger. You'd think with bloody Spartan's resource they've got, they should have had some visible gold at some point. They have. I think this was one of the early ones from when they were still called Gascoigne. You can see the bloody little specks there. Not huge amounts. That come back at, that was pretty much did the whole thing at 29 metres at 11 grams. But as I was mentioned about top cuts here, you say assays top cut to 50 grams per tonne. So in the intervals, they were, if something blew the machine apart like Odyssey did, they'd just get a 50-gram top cut to mean that, doesn't smear across the resource and then potential upside later if you do have those top cuts in place. It's a bit more of a conservative approach. I'll still remember, this is one of my favourites from back in the day, 2011, the early Northern Star days. This is actually when I was there. This is, I think, Voyager 2. This was their... and just the way the announcement, just the biggest, boldest writing, 12,178 grams per tonne. That was bloody Bill he was in max gold mode then. He loved it. So I think you can see visible gold on the corner there at the top of the core. So it wasn't for that grade. So there was obviously a shitload of fine gold in there, not just a big bloody gold flake. So it comes in different shapes and sizes.
Don't think the ASX would let you do that one anymore.
Nah, how good bloody... I love the font. Good font size there. Now, one of the biggest humdingers of gold deposits that were found that just looked like a friggin' abscess come off this ore body was Fosterville, which was Kirkland Lake. Then obviously Agnico Eagle took over Kirkland Lake. They're not in the heyday that Fosterville was. I think it was a 30-gram head grade going through the mill there. It was
a good ounce.
Phenomenal. And here's a picture of I think this looks pretty zoomed in of some core at Fosterville. But you look at the infill drilling results. These drilling results aren't that core. It was from a different time. But 976 grams per tonne over 7 metres. 933 grams per tonne over 6 metres. That is the friggin' gold. The Fosterville was just this absolute anomaly. It was unbelievable. I don't know if this was the one you were talking about, JD.
Beta Hunt.
Beta Hunt. So Beta Hunt back in, when was this? 2019, around 2018, 2019.
Yeah.
It was a nickel mine. They weren't even a bloody gold mine. It was owned by RNC. So that was a Canadian company. And they were trying to sell it as a nickel mine, and it was just, it was tough going there. And they knew this. They knew gold was in pockets in random places. And I remember I think I was working at Daisy Milano at the time. So a lot of the people at Daisy drove out of Cambalda, so it was all part of that Cambalda community. And they've pretty much taken, I think he just took an air leg drive cut, and they've come down and he started washing it down, and they were like, they had to ring up and say, I think, GRs, you got to get down here, because there it was just fucking gold everywhere, and you can see these rocks here. So you've just got these, I don't know what it looks like. It's got gold mold on it. Like there's just gold growing on the rock. It was just, they've obviously just hit this patch, and then they've kept going on it. And then I think a year later as well, they hit another patch. And so the sales process just became so much easier. It just went from not being able to sell it at all to, I assume RNC sold it to Karora.
Did Karora just rename?
I'm not sure. Actually.
Couldn't tell you.
Yeah, maybe they did. Maybe that was it. So that's obviously the Beta Hunt that Westgold have as we speak. So don't worry about the nickel. This is gold. So that was a 90 kilo gold specimen, that rock.
Wow.
So I don't know what the bloody grade of that was. So the one I can't find that I remember getting showed at the wet mess. And it was a photo. So it's one thing at the wet mess that was definitely true. And it was this picture from an ore drive at Yilgarn Star, which is Southern Cross, which is owned, Bartow Gold, Minjar now, that area. And it was from, I think it was the 90s. And it was, so, like Bellevues and Orobandas and that, like you just have the quartz vein going through the guts. This was a drive like that, but the vein, which was like pretty bloody thick, was just a gold vein.
Oh
like it was just friggin' pure gold. I've never seen anything like it. It was just absolutely phenomenal. I wish I had the photo. If I find the photo, I'll show everyone. But it was just a thing of absolute beauty.
Chuck it in the director special, mate.
Yeah, and I've also heard, if anyone's got photos, these are real back in the day. I've heard Norseman. Back in the day, like Harlequin. The shift boss I worked with at Paulson said, most mines you got, what was it, like it'd be all quartz. Like, I know Paulson's was all quartz in the ore body, and then you'd have the gold bearing vein in the middle. He said, I think it was Harlequin or one of the Norseman gold parts was the opposite. So you'd have all gold and then just quartz veins here and there. So there's but people were, with all that free gold comes a lot of gold in people's pockets as well. So
pockets and socks and
and there's some stories from back in the day of the gold that the reconciliation wasn't there, and like I've heard people that once the authorities actually came to site and people knew they were buggered, there was some horrible events that happened on the back of that. So and gold was in the hundreds of dollars an ounce then when that was happening. So could you imagine running into that stuff now at 4,600? So good luck. Just keep fucking drilling holes, everyone. You will find it.
To wrap up, Matty.
Gotta be into it. Mate, I'm going to rip them out for you nice and quick.
Was it? RNC, Royal Nickel Corporation, in June 2020 changed its name to Karora.
There you go. Yeah, beautiful. Oh, nothing like a name change. It's like M&A happened.
All right, rip
beautiful, mate. $100 off your IMM Underground Operators tickets, April 7th to 9th in Adelaide. Can't bloody wait. Also got our great partners, MMS Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterbores, Swick, Quattro Project Engineering, Cross Boundary Energy, Hooteroo Money Miners.
Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.